Good morning, everybody. Hope you all had a good weekend and are all looking forward to the week ahead. Okay, so last week the results were the Dow Jones was pretty level. It was down 0.2% for the week. We saw the Nasdaq down 0.8%. We saw some falls in the UK market in the FTSE, which has been a little more stable in the US so far year to date. But last week we saw a fall of 2.9%. We saw Shanghai down 0.7%, and we saw the DAX, after a couple of positive weeks, fall also, down 1.7%. So not great. All the major indices falling. The Japanese yen only managed to trade for 2 days because of the various holidays over there, and we still saw a fall of 3.4%. But as I spoke about in recent briefings, the Japanese market is a pretty scary place to be right now. The volatility that exists out there is dangerous, both on the Nikkei and also the currency. So best steer cleared off for the time being, I think. There are still positives to come out of it, though. The bundle of four were up on the week. They were up 1%. We saw Facebook up 1.6%, Microsoft up 1%, Apple fell 1%, and Google was up 2.6%. A little bit of common sense coming back into play. Once again, I talk about these stocks a lot, and we saw quite a lot of falls in recent weeks due to not reaching the earnings and this, that, and the other. But ultimately, they are, longer term good companies and good long term investments. And one of the major reasons why we saw Apple fall as dramatically as it did was billionaire investor Carl Icahn sold his shares in Apple probably about 9 or 10 days ago now, and this had a negative impact on the share price. And if you listen to Icahn speak, he still says that he thinks it's a great company, well managed, and he still thinks it's good value to buy. But ultimately, he'd made 50% for his clients, for his hedge fund, and therefore it was time for him to get out. It's like anything, you've got to take profits at some point. Albeit the difficult thing, of course, is finding where to reinvest. Who knows? He may well go back into Apple in a week or two. But at the same time, you've got to sometimes realise those profits and can't allow them to be just on paper. So on the currency side of things, we see the sterling fell a little bit, fell 1.4% against the US dollar. It's now at 144. I think, again, I've spoken about sterling many times being undervalued, and I'm pretty sure that it remains so. I think if you've got some US dollars in your pocket and you buy some pounds right now, you're getting good value for that. Again, of course, Brexit, a lot of talk about that, whether it will happen, whether it won't. I think there was a couple of chaps from MI6 who came out recently and spoke about the increased risk of terrorism should there be a Brexit. Now, that's going to push a few people I think onto the stay side, and I'm pretty confident that you will see a vote for Britain to stay in the EU, and in that respect, I think you're going to continue to see sterling appreciate against the US dollar. At the end of the day, Britain is what it is. Lots of people are probably happy in what they do. People like the status quo, and whilst the likes of Boris Johnson, Nigel Farage are extremely intelligent guys, and I understand a little bit of where they're coming from and their desires, I think they're a little bit too eccentric for the Brits. It's not like the Americans where they can get behind someone like Donald Trump. I think the Brits are a little scared of eccentricities. So therefore, I don't think you're going to see a vote to leave the EU because it's too much of a shake-up for most people. So look at the sporting front. They've done it. Leicester City, Premiership champions. What can you say? Certainly, as far as I can remember, and the sports that I follow closely, the most wonderful sporting achievements I can remember. Congratulations to everybody concerned. 50-1 next year to win the Champions League. Is it worth a fiver? Who knows? Ironically, they're actually lower odds to go down than they are to win the Premiership next year. So there is an air of sensibility come back to the world, albeit if they continue to follow what they're doing and none of the big guys decide to leave for the bigger money, I actually believe that there could be a bit of mileage in this, and you might see Leicester going on and continuing to be a top club fighting at the highest level for the next few years. It was interesting listening to a guy called John Micklethwaite, who's actually the editor-in-chief of Bloomberg and also a Leicester City fan. And being, the editor-in-chief in Bloomberg, he was comparing them to companies like Apple and Nokia, who over the years, started off with different ideas on what they were doing, and who would have thought they would have emerged into the companies they were. Hasten to add, this guy John was one that put £20 bet on Leicester City to win the title every year for the last 20 years, with the exception of this year. So perhaps maybe he's not the best to judge. But I better crack on because I'm over my 5 minutes already, and I appreciate that you're all very, very busy people. I've got a quote for the day, which came from Jim Cramer, the motor mouth on CNBC, who any of you that watch that will know who this guy is, a historical, very successful fund manager in his day. And this refers back to what I was speaking about before with the Google and the Apple and the Facebook and the guys that are in and out and playing with that against the actual fundamentals of the company. And he says you have a class of investors and you have a class of speculators. The speculators historically haven't been big enough to cause the investors to doubt the long-term vision of the stock. So again, that's what it's all about. Buying good companies, holding them for the long term. Of course, like Icon did, when there's 20, 30, 40% or even less in certain markets, profit to be taken, get it off the table, bank it, realise them gains. But at the same time, look for the longer term, look for the quality companies. Have a good week, everybody. See you later.